We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. I'll ask for returns for you to smash that like button to when you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we are with the SPY. We're going to talk about the S&P 500 index, 10-year treasury, the VIX, and everything going on in the overall market and how things are looking moving forward and some key levels to watch. Today, there was a lot of volatility, but the overall market pulled downwards. Our SPY bot this morning sent out a bear indicator since 9:55 a.m. And from that moment forward, put options were up 2 to 3x within minutes, guys. This is our new release that allows us to have an edge within the volatility of the markets to maximize on opportunities, whether stocks are going up or going down. And you can now gain access to it as well. The link is down below in the description to the 42 vision indicator and the SPY bot. So we're going to talk about the SPY and all the key levels and different data points to be aware of. But before we do, I want to share with you guys the opportunities I mentioned this morning over at the Discord. And if you guys want to know about these stocks early on in the pre-market, we strive for opportunities like these every single day. Check out the link down below in the description to the Discord. We look forward to having you join us, and we're going to jump right into it here with everything in the overall markets, the SPY, and all the data points. So the opportunities I mentioned this morning turned out to be phenomenal and beyond expectations. And if you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So these are the two stocks I mentioned this morning. IMPP was our home run from yesterday. And turns out it gave us collectively two opportunities that were home runs together, right? We're going to look at that chart together as well. And then KRBP turned out to give us small jumps of 5 to 10% within its pullbacks, and it spikes up. So I mentioned IMPP in the pre-market as it was pulling downwards under a bear indicator, and towards the bell it consolidated and ran a 5 to 10% run, pulled back down, and then you see that full transition here on 42 vision, got that bow indicator, and things spiked up to a highest point of 15% plus. A few minutes later, pulled downwards, got that bull indicator again, full transitions into weakness and strength back and forth until it picked up momentum. Right there you see it on 42 vision, and it hit a second highest point after the dip of 15% plus and collectively 30% plus within both opportunities. If you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We strive for opportunities like these every single day. We look forward to having you join us, and we're going to jump right into it here with these charts. So here we are with the SPY, which actually tracks the S&P 500 index, and we're going to talk about some key levels here and some key metrics that right now live within the charts are reacting pretty quickly, and we want to be aware of this going into tomorrow, and it could be affecting futures as I'm doing this video, as you come across this video later tonight and even tomorrow morning and throughout the rest of the evening going into tomorrow and moving forward, right? And we're going into the end of the week. This is pretty big. And then we have a weekend in between. And then next week, there's a lot of data to be aware of. So right now, the SPY has been in an upward movement, consolidated, slightly bounced up, rejected, and pulled back down. And the question is, could it continue, right? I'm going to pull up the ultimate 42 vision bull and bear indicators, and we're going to use it to analyze the charts and everything that we're looking at here. And you can now gain access to this as well. The 42 vision indicator link is down below in the description to receive the clarity you deserve within the volatility of the markets to maximize on opportunities no matter which direction stocks or the overall market is going. So here we are with the bull and bear indicators, and currently on the 30-minute, it got negated here. We were under a bull indicator yesterday, and today we are under a bear indicator as the volatility continues. But we are up from yesterday's lows to where we're at now. The question is, could we hold this up, or will we break through the supports? That's what we're going to talk about. And if we do, I have the reasons why based off data and information in different data points and charts. We're going to all break it down here in today's video. So one of the first things is the 10-year treasury, guys. The 10-year treasury was sitting at 1.85. And currently it is dropping like a rock. It's at 1.75. When I started making this video just a few minutes ago, it was at 1.78, 1.77. And I'm going to pull up live action of this pullback. You see it right here. Okay, it went into a bear indicator, pulling downwards from the 185 mark. And here we are at 1.755, 1.767, give or take, guys. This is pulling downwards really, really fast. And if we zoom in here on the 5-minute, you could see that this is extreme weakness. And what does that imply? Well, it usually means that sometimes the bond market, and right here live, you're seeing it go down now to 1.74. And if I put the 5-minute again, you could see that things just continue to pull down lower. Sometimes this is a way to project what the bond market is pricing in as the possible rate hikes to come. Number one, number two, and it keeps going. Also, economic growth may be projected to slow down. And as I'm doing this video, the way that right now bonds are dropping, it is pretty fast and rapid, guys. And on the same time, in the same token, you have here oil skyrocketing past 110 again and retesting the recent highs here of 116 going into possibly tomorrow. This video is very important. I'm showing you guys live updates on what's going on. And right now, the 10-year treasury just keeps on collapsing at 1.73. We'll have to see how low it goes tomorrow. How could this affect the markets? Well, there's some reasons why stocks go up when 10-year treasuries go down. And there's other reasons why a 10-year treasury could be falling and could actually hurt the stock market, especially when it moves this fast. You don't really want things that are actually indirectly correlated to the market to move too fast, because sometimes it doesn't really look like valid data and it could stir up volatility to either direction. So when you take the time to watch this video, also look up futures and see for yourself where the futures are at. Are they red or are they green? Most likely they're going to be red, especially when this is happening this fast. And then we have oil going up just as fast. And then we also have the VIX, right, having volatility back and forth. And if the VIX breaks through 32 going into the next few days, it's going to spark up volatility and possible fear into the markets. But as I'm doing this video, very quickly, right, the 10-year treasury just continues to pull down lower. It's right now at 1.719. If this continues to rapidly fall, it could eventually stir up volatility to the upside if it's looked as a positive metric of the bond market pricing in lower rate hikes or lower rates. But really, this is a big sign in the bigger picture of things. If you look it up, what the 10-year treasury can sometimes mean, it means economic growth or slowdown. And especially when it's going down this fast, it can mean economic slowdown. And what that could also stir up is possibly a more dovish Fed. That's what some people are hoping for. So we got to see, because this amount of volatility in anything, it doesn't matter what it could actually imply, is not healthy for the possible direction of stocks or volatility overall. And I've been saying this in my videos. Volatility will continue to persist. We're right now seeing the VIX pulling downwards a little bit. It's under a bear indicator on the 30-minute, and on the 5-minute, it's under a bull indicator. As we see it, if it continues to bounce up from here and actually negate on the 30-minute this bear indicator and push up higher, we gotta watch 32 if it breaks through it. If the VIX goes below 29 or even 27, that will be something key to watch. But right now, things are on edge, right? To the back and forth of either going up on the VIX and pulling down the markets, or staying around this area, creating that uncertainty. And then we have the 10-year treasury just collapsing, right? Like just pulling downwards to newer lows that we have not seen in quite some time. And if it breaks through the recent lows of 1.68, that will be something to not ignore. So we have the 10-year treasury falling pretty fast. Then we also have here the VIX pulling slightly downwards and sitting around this area of consolidation. US oil continues to go higher. And then we have the SPY here just slightly pulling upwards here in the after hours. But based off the futures, if you look it up, it's slightly pulling downwards. Now, what's going on here in this area and what to look for moving forward if we break through support levels. Well, the first support will be down here at 430. If that gets broken through, the next one's down here at 427, and then all the way down here to 410, okay? Those are the key levels to be watching within this whole entire volatile downward direction. To the upside, we want to see it break through 440, stay above it, and get back up towards 448 and up here at 457 based off the history of the chart. But right now, when you look at it, what is some of the data that came out today that a lot of investors probably overlooked? And it's super important to realize. It's the ISM non-manufacturing index. And there's a reason for this, okay? The prior reading was missed, okay? And it was 59.9, and they expected something higher. This time around was expected 61%, and it got 56.5. This is an indirect correlation and measurement of supply chain issues, guys. This is a big projection of further inflation and also the whole issue with the supply chain issues and the overall economic growth. And when you really think about it, the 10-year treasury is actually showing us economic growth projections of slowing down, or at least it's pricing it in. And it has to do with a lot more than that, right? Because there's so many other indirect issues affecting it. Another way to look at it too, that some people want to look at it from the positive perspective, the bond market could be pricing in lower rate hikes. That's another thing as well, but doesn't guarantee it. Right now, what we know is look at the futures. Tomorrow we may see volatility, and this data here plus the 10-year treasury falling that fast, what I'm seeing is economic growth, supply chain issues, slowing it down. As always, guys, thank you guys so much for watching. I'm going to continue to look at what 42 Vision shows, the SPY bot, to have that edge within the volatility of the markets. You can now obtain it as well. Every single member using it is loving it and maximizing on opportunities in either direction. And the volatility is not going anywhere. And in the meantime, you're going to want to be able to see what's going on zoomed in and in the bigger picture. As well, we're still on the 1 week under a bear indicator. As always, guys, thank you guys so much for watching, and let's make some money.